Blofin is having its War of Whales trading competition with a prize pool up to $4.2 million. Now in this video, I'll be showing you the exact strategy that I'll be using to trade in this competition, and I'll also show you on how you can join my team. Now, if you don't have a Blofin account already, you can use the link in the description and you can get 5% cash back on your trading fees. Now, if you already have an account, that link will also take you to my team page. If you scroll down and you select trading competitions, you will see that currently the Crodl trading team is here at number 23, and then if you enter it, you can join. So now let's go over the strategy that I'll be using. So we need to use TradingView for that. Now the first thing we need to look at is what indicators I'll be using for this, and you can find them completely free on TradingView. For the strategy, we really only need one indicator, and if you search 3MA trend indicator, it's going to be this one from the backtest. Now I already have it here on my chart, but if I open up my settings, you can copy that as well, which is going to be RMAs, and this is the values that I'm using. So the reason why I'm using this indicator is because it gives you a pretty good indication of whether the market is moving upwards and downwards. And also remember, this is by no means any financial advice, and always do your own research. I'm just showing you what I am using. So first thing we need to look at after we've added the indicator is going to be the symbol that we are trading. Now I currently trading Solana, Ethereum or XRP, but you can choose any ones that you are trading. But it's good to backtest it a bit as well, because not all strategies work the same on all pairs. So the next thing we're looking at is the time frame. Now in a previous video I did cover on why I won't be using like the 1 minute or lower time frame. So I'll actually be using the 5-minute time frame for the strategy. Now the next thing that we need to look at is what confirmations we need before we actually enter a buy or a sell. So this is not just going to be trading on just the indicator. We'll also be using a bit of price action and support of resistance levels, but we're going to be drawing that manually based on what the indicator is showing us. So the goal for this is that we risk only, let's say, $10, and then we target $30 or $40 per trade. So it's going to be a higher reward to risk ratio. So I'll show you that on the chart as well. So if we use the position tool on TradingView, what we're trying to do is basically, let's say we risk like a stop loss of this size, and we target a 3-to-1 risk reward. So this means that for every $10 we are risking, we're trying to make 30. So this is kind of the setups that we're looking for. So even though we might be wrong some of the times, hopefully the majority of the winners would then cover our losses. So I'm just going to delete this. And now let's look for what we consider to be an actual trend change. You can use any time frame that you like, but if you're going to be using a time frame that's too high, such as let's say the 4 hours or the daily, then you'll probably only take 1 or 2 trades the entire competition. So that's why I am using lower time frames, because I'm going to do some scalping. Now what we're looking at next is what we consider to be a trend change. So for me, you can see that even though this is changing up and it's showing you to be green and it does continue moving upwards, it doesn't always happen in this clear way. So what I'm doing is I'm waiting for all of the moving averages to cross over to one side. So what I mean by that is right here you can see that we have this bottom green line, which I made a bit blue to show it's the slowest moving average, and then we have this middle one, which is medium, and then we have like a fast moving average. So you can see that all of them are currently above the slow one. So it's kind of in an order where you get slow, medium, then fast. So that's the order that I'm looking for. And obviously if we have that to the downside, then I do consider that to be a bearish trend, and I'm going to be looking for shorts. So right here we can see the crossing. So you can see that all of these are basically lining up. We have this blue or the slow moving average, the medium, and then also the fast right there. So this shows us it's a good time to start looking for longs. Now I actually did take a trade this morning, and the one that I entered was as soon as I saw that all of these are crossing upwards, I looked for where price is pulling down to a range where I feel like I want to be entering. So as price were moving down right here to this level of support, so if I zoom out a bit, we can see that we had a support level, well, rejection right there, rejection here that we then eventually broke out of, and then we found that support right here and also right here. So I was looking to enter when price retested that again. So I entered around this area, probably right here, and my stop loss was below all the moving averages, and also it was below this. I think it was around this level and this low right here, and I was targeting a 3-to-1 risk reward. Now I didn't end up getting the full 3-to-1, but I did end up taking profit around 2.7. So I actually can show you the trade here in Discord as well. This is the trade that I took, and you can see it was on that range where I entered, stop loss below this low, and then it was pumping up. Now what did end up happening is we had a bit of a deeper pull down. It didn't hit the stop loss, but it did continue going upwards. Maybe I could have stayed in for it just broke above a 3-to-1 risk reward, but I did trail my stop loss up and then I exited around here. So sometimes you need to do that, and price doesn't always just pump in your way directly. So it's good to have good risk management. And you can also see that as price were breaking through, you could also move your stop loss to break even to make sure that you have a risk-free trade, and you can even move it a bit higher to cover the fee. Now, the same thing we're going to be looking for is short. So unfortunately, this trend change wasn't that big because we did have a bit of resistance, and the current news events are also playing a bit with the market, so we're not trending very clearly right now. So usually we are looking for a lot higher risk reward trade, but it's always good to be cautious when you are trading. Move your risk up, make sure that you lock in your profit. So again, we are still currently in my opinion in an uptrend right here, because we don't see any of these red lines crossing downward. So if all of them were basically the fast and the medium were below the slow moving average, then I would have looked for taking shorts, and now I still consider of re-entering along depending on where we find support. So here we did see a bit of support in this range, but I do think we might see a lower bit pullback to these levels right here. Then if we see good support, I'll probably look for another entry. But now let's look at another example for short trading. If you want to take shorts, here's also example where we were already in the short crossing, but all the moving averages were bearish, and it never really just pumped back up for us to enter a short unless you would have entered in this block right here, which is very unlikely, but it did end up being a rejection at this level here. So before we actually crossed the bullish, then it got rejected from this range and it just continued selling off. So that's similar what we are looking for, but the sooner the trend changes, the better it is to enter, because then you probably have the most momentum and the better entry to just let it play out. But sometimes you do not get the opportunity for price to come back and enter you, so you have to look for re-entries. So if you didn't enter anywhere here and you wait for this to be a potential long trade, but you can see it got rejected, we turned red again, so bearish, then we're going to be looking at where to sell again. So first thing we can see is if I draw this line right here, we can see that this is going to be a rejection point. So we can see that price got rejected. There was a bit of a sell-off, rejected sell-off. Then we did break through, and we're basically fighting that resistance. We pushed through it. It became a bit of support, but you can see again, we got a dump and then a rejection. So this means that this is an area of interest for us, and this is where we potentially want to be getting in. So the closest we can get to that level to enter, the better, because that means the tighter our stop loss can be, and also the quicker we can make profit. So what I mean by that is as well, if we go ahead and we take this short, so in this range, if you were to enter a sell position, you had your stop loss. I'd probably place it above these highs as well, because we know that price can wick there, but you can even have it higher. Just remember that the bigger your stop loss, the more difficult it is to make decent risk reward factors, because price doesn't always move this well. As we can see, the tighter the stop loss, so currently it's 2.22, but if we go ahead and make that even smaller, you can see how this number is just jumping up dramatically. So again, if you were risking $10, this is going to be a $50 profit move. But in this scenario, as where you're also risking $10, now you're only making 20. So Having a smaller stop loss is sometimes, it is always good to obviously make more or quicker profits, but you also don't want to make it too tight and put it in an unlogical place where you'll get stopped out a lot. So again, looking at key areas, probably place a stop loss above these highs right there, and then the goal is to get an entry as close to that level as possible. So right here we can see that all of this played out pretty well. I'd probably just first off target a 3-to-1 risk reward. So if we take a look right here, and then you can basically just trail those moves based on these highs. So every time we do make like a let me just use like a drawing tool. So your first take profit would, after price move right here, we got a rejection. You would go ahead and I'd place my stop loss right there, because this is going to be the recent basically high. Then as price is moving and not breaking this high right here, and we take out this low, then all you need to do is move your stop loss to that level. And we did have a massive sell-off. Now, personally for me, if I see a big sell-off, something like this, I normally would just, look to take a bit of position off the table, if not take the full trade off as well. So now if we look at a trade setup that didn't work out, is basically, we can see right here, we had all three moving averages going to be bullish. We have the fast, medium, and slow moving average. They're all lining up. And the next thing we're looking again, we look at previous resistance or support levels. We look at where price had a reaction of, and then we want to go a bit ahead and enter in those ranges. So again, I don't think I would have entered anywhere above here. Usually I wait for price to be in that range of the moving averages. I mean, if you can touch it, even better, because then you get a better entry and a tighter stop loss. So in this scenario right here, I'd probably have entered anywhere in this level, and then stop loss just below the like area of interest, and then our take profit is going to be a 3-to-1 risk reward. So it's going to look something like this. Now right here we can see prices basically smash through that stop loss, and that's also fine, because that's why we have a higher risk reward trading setup. So we don't expect to be right every time, but if we can get the 3-to-1s or even 5, 6, 7-to-1s, then it makes up for these moves right here. Because just afterwards, as soon as that trend shifted, it gave us better opportunity as well for a stronger move to the downside. So that's why you don't really want to wait too long even after a loss, because if the trend shifts, you kind of want to be trading that trend and trade it out. So you need to make sure that even if you get into a bad position, that you do analyze the next position as well, because it might be the strong trend that takes a shift or changes. That's where you want to use higher time frames as well. Get a bit of confirmation. You can see right here, from this point, if I mark it on the chart, we can see on the 5-minute time frame. Basically, from there we do get our bearish crossing. So it could be anywhere from here. And then the higher time frame is also still bearish, and you don't want to be just taking longs. Focus even more on shorts, but backtest it, make sure that you understand it. But this is what I'll be using for this competition. Now I hope this video was clear for you guys, and if you like it, make sure to leave a like on the video, and also if you want to check out my Discord, all the links are in the description of this video, and I will see you in the next one.